Thanks very much. It's wonderful to be back. First and foremost, I want to thank the U.S. Grains Council and the American Soybean Association, U.S. farmers, and other companies for the support that they've shown for bringing myself out to speak with you all. This is about you. So whatever questions that you might have in terms of prices and investment flow and that sort of thing, please tap into the resources that the sponsors here have so generously provided to the Southeast Asia livestock industry. So probably a big hand, first and foremost, for these guys. So last year we were in Cambodia. It was September. Life was extremely volatile, and we had no idea what was coming up the pipeline in terms of how widespread the financial crisis was going to be. I gave the same presentation. It's going to look totally different this year, obviously. But part one was last year in Cambodia, so if you were there, you saw it. This year's part two, kind of a follow-on. Not much has changed, okay? I still believe that it's going to be agriculture. It's going to be food. It's going to be the shifting dietary means in China and India. That's going to shape the globalization. That's going to shape the economies going forward. So really that general thesis remains. I was with Macquarie last year. In about mid-December, I decided, I've done all this. I really want to go out on my own, and what better time than in the middle of a financial crisis to start a new company, which has been quite interesting. So Conciliagra was launched. We specialize in grains and oilseeds. We do brokerage and clearing for many commercial accounts and some hedge funds. We also do advisory work for various hedge funds, both in the US and Europe, as well as investment banks. And there will be an announcement forthcoming in the next few weeks, but we are close to sealing a joint venture with a physical broker. So we're going to be going into the cash market as well, and that's going to be actually focused into Southeast Asia. So look for that announcement here in the next couple of weeks, but we're very excited about those developments. All right, so looking back to look forward, what happened? We had three bubbles that burst almost simultaneously, okay? And the big cow, or the bull on Wall Street, completely fell over. The housing market in the US was bloated and overpriced. That collapsed. The credit market absolutely froze, seized up. That's still an issue as you talk about credit and financing lines. Okay, we're still sorting through that. And certainly the emerging markets had suffered that slowdown because of the housing and the credit issues in the US and certainly in Europe. The amazing thing is in that period of, say, July until the end of September and certainly into January, it's estimated that $44 to $47 trillion went up in smoke. Okay, it's gone. But yet the resiliency, what we're starting to see is the resiliency and these new emerging economies and kind of the shift of global, you almost want to say financial powerhouses, but there's certainly some interesting trends that are appearing as we work through this. When you talk about commodities, okay, whether it's agriculture, whether it's metals, whether it's energy, when you hear headlines of inflationary concerns, okay, the investment community will likely react and buy commodities. Okay, so whenever you see anything that says inflationary, realize that possibly there might be some money coming in. Certainly the weaker US dollar, okay, that is another inflationary concern, but when you see the weak dollar, that is an investment play to buy commodities. Certainly we've seen that in gold, okay? Gold's been one, crude energy has been another one. The central theme that has not been eliminated at all, and what we've seen in the soy market, is the confusion and the lack of confidence. That remains. Okay, personally, I'll step back, and as I tell all my clients, even if I'm doing their brokering and clearing, I trade my own portfolio. It's mostly futures, some optionary. I'm pretty transparent. I publish a daily crib sheet in terms of what I'm buying and selling. I'll get right into the price projections because on Friday and again here today in the electronic session was buying October and December meal. I think the meal market is actually quite fascinating for the next, call it 5-6 weeks, and certainly into November. I try to keep that actually quite transparent. Let's talk about price projections because probably that's what you're most interested in, and not my view of the markets because you all have my presentation and you can see kind of what I think about different things and read it on your own. December corn. This is all going to be December futures, except for beans, which will be November beans. December corn, 304. I just looked at it. It was down 2 to 3 cents. Can it break $3? Absolutely. Do I think that the cash premiums will likely offset that? And you're probably talking about a $3 flat price. I think so. I think so. Because the U.S. producer, we saw it in the July expiry, we've seen it in the September expiry, and we'll likely see it in the December expiry, the lack of cash movement coming from the U.S. producer. Okay? And the U.S. accounts for 75% of world corn trade. And if the producer's not selling it, okay, then we did see the July invert to the September in expiry. We do see the September trading a 4 to 5 cent premium to the December. That's very narrow considering we'll probably have a plus 2 billion bushel carryout in 09-10. Okay, we've got a September WASDE coming out September 11th, so this Friday. But I do think the U.S. corn ending stocks, if we do not have a freeze, will be over 2 billion bushels. That is relatively comfortable. And I would go forward and say it would be my natural reaction to think that March certainly, well actually December and March will likely gravitate towards what we've seen September expire at, which is going to be that low $3. Okay? The other thing about the corn market, prove it to me, prove it to me, prove it to me. Okay? Once fooled, twice, whatever the saying goes. This is why I don't tell stories, I don't tell jokes, and I don't have sayings, because I always screw them up. I never get them right. And that's just one of those things. But I do think that this market, there was so much money lost in these long-only strategies by banks, by hedge funds, certainly the commercial, that panic buying when corn was at $6 and it was like it's going to 10. Beans were at 15. Well, they're going to 30. Just this insane euphoria. And again, fine. But then everything went to pieces. And we learned it in the spring plantings. We knew that there were planting delays. But guess what? The market would not put a production premium into the price structure. We know that the crop's delayed in terms of developed. We're about 2-3 weeks behind maturity. Again, the market will not put a production premium risk into this. Okay, so you've got to realize that there is no premium risk. There's no production risk built into these prices. Okay, if we get a frost in middle of September, and this coming up weekend, you will want to pay attention because there are some forecasts that are calling for some pretty cool temperatures. Okay, the old farmer almanac and the old farmer adage is if we do get a frost in the middle of September, okay, if that is realized, then typically it's 14 days after that you get another frost that's even worse than the first one. Okay, and this happens time and time and time again. So it's just something to be aware of. Also something to be aware of, okay, the market, no premium risk, that's fine. Can we go below $3 in December futures? Sure. Okay? Because there's no reason to buy it. If I'm looking at it as a speculator, there's no reason to buy it. Because they've been long and wrong this entire ride down.